Meet Peter Lynch, the investing maestro who turned $18 million into a staggering $14 billion. Over 13 years, he averaged a jaw-dropping 29.2% annual return. In this video, we're uncovering the secrets behind Lynch's legendary success so you can apply these in your approach to investing. All right, picture this. Peter Lynch, the investment genius, had a knack for spotting opportunities right in our everyday lives. He called it his one-up on Wall Street approach. It's like finding hidden treasures in plain sight, right in the middle of our daily routines. Take the simple act of shopping for groceries. Lynch saw beyond the aisles of products and recognized the potential in the companies behind them. This approach allowed him to turn routine tasks into investment opportunities, showcasing the power of his everyday wisdom. Now, let's get into the real magic of Peter Lynch's philosophy: common sense investing. He made it crystal clear that you don't need a fancy finance degree to conquer the stock market. Lynch believed in keeping it simple. No complex jargon, no mind-boggling theories, just good old common sense. He'd say, if you can't explain it to a 6-year-old, you don't understand it yourself. That's how he operated. He'd dig into companies, understand their products, and ask the basic questions. Is this something people will keep buying? Does the company manage its money wisely? Lynch's investments in companies like the Limited and Hanes brands were all about understanding the everyday products we use and wear. He recognized the power of simplicity and turned it into a wealth-building strategy. When it comes to Lynch's way of picking stock winners, it was all about the checklist. He'd look for companies with steady earnings, manageable debt, and clear growth potential. He'd ask, is this a business I can understand? And is this a business with a strong competitive edge? For instance, when he invested in Dunkin' brands, he saw a company with a recognizable brand, a loyal customer base, and room to expand. It ticked all the boxes. This checklist wasn't just some fancy tool, it was a practical guide to finding stocks with real potential. Now, here's where Peter Lynch really stood out: his rock-solid patience. He wasn't chasing after quick wins. Lynch knew that true wealth takes time to grow. He'd hold on to investments like Fannie Mae and Marriott for years, letting them grow and compound. Even when the market got bumpy, he trusted in his research and stuck to his guns. This approach of patient, long-term investing is what truly set Lynch apart. It's not about chasing after short-term trends, but rather, it's about having the confidence to stay committed to your investments, even in the face of market ups and downs. So there you have it, the heart of Peter Lynch's investment style. Remember, it's about recognizing potential where others might not, keeping it simple, and having the patience to let your investments flourish. Now it's your turn. Take these simple lessons and put them to work in your own investment journey. Who knows? You might just uncover the next big thing. If you're hungry for more investment insights, think about diving into Peter Lynch's own book, One Up on Wall Street. It's highly recommended. If you found these quick insights valuable, consider sharing them with your fellow investors. Thanks for watching.